Good morning to all participants. We will be starting the webinar. My name is Omar Muez, and along my colleague Madeline Tubens, we want to thank you all for your participation on our webinar related to the Puerto Rico Incentives Code. Specifically, we will be discussing Our discussion will be focused on the visitors' economy incentives, which historically has been known as the tourism incentives. It has been a public policy of the government of Puerto Rico to incentivize key industries, and it is not a secret that tourism, Puerto Rico being an island, is a fundamental driver of the local economy and job creation. So let's start this webinar by taking a deep dive into the visitors' economy benefits under the Puerto Rico Incentives Code. First slide is the disclaimer. It is important this presentation and its content do not constitute an advice. It is intended for information purposes. Proper planning should be done with an expert in the subject matter. Generally, we like to share in our presentation our values that we generally use on our daily work. Our values are abbreviated as CLEAR, meaning collaboration, leadership, excellence, agility, respect, and responsibility. Please note that our presentation materials have information to cover almost 4 hours of seminar. This seminar is scheduled to last only 45 minutes. Therefore, we have included our contact information, Madeline and myself, so you can contact us with any questions that may arise during the presentation or afterwards. Let's go to our agenda. The topics that we will be discussing will be the relevant terms that are used through our presentation. We will be discussing the objectives. We will go through a background of the Puerto Rico tax incentives. We will address the tax incentives of the visitors' economy that are included on Chapter 5 of the incentives, tax incentives code. We will also go over other relevant benefits that are related to the visitors' economy incentives. And finally, we will go over the process for the application of the tax incentives. These slides include relevant terms used through our presentation that have been abbreviated. It will help you make reference while reading these slides. For example, when we are making reference to Act 60 of 2019 or the incentives codes, we are referring to the Puerto Rico Incentives Code enacted under Act 60 of 2019. For example, DDEC abbreviation, we are referring to the Department of Economic Development and Commerce. Person, we will be referring to any natural or legal person, pass-through entity, state or trust, and so forth. Let's go to our objectives. The objectives of our webinar is to discuss the benefits of the tax incentives, focusing on the tax incentives of the tourism industry. We'll also be discussing the requirements for the application of the benefits as well as the compliance requirement once you have a grant of tax exemptions issued. And finally, we will go over the overview of the process of the application for such tax exemption under Act 60 of 2019. Puerto Rico tax incentives background. How we end up with the Puerto Rico incentive code and how were the incentives available in the past, we'll be discussing in the next couple of slides. As a matter of providing you a background of the tax incentives prior to the enactment of the Puerto Rico Incentives Code, in the past, the tax incentives were available under special separate laws. Therefore, a search of the incentives by industries was required to be able to identify the applicable incentives to each taxpayer. For example, in the tourism incentives were enacted through various laws. The last law that was enacted was Act 74 of 2010, which is generally known as the Tourism Development Act. If you wanted to request the benefit, you should evaluate the requirements included in that act to be able to submit the application. Other separate laws that provide incentives, for example, the manufacturing incentives were enacted on Act 73 of 2008, which is known as the Economic Incentives for the Development of Puerto Rico. Other separate incentives laws, which are highly known, are the Export of Services, which was enacted under Act 20 of 2012. The individual investors incentives were enacted through Act 22 of 2012 and so forth. The enactment of Act 60 consolidated the majority of the special laws that provided incentives in one place, the Incentive Code, adopting the legal and administrative framework for the application, evaluation, granting, and denial of incentives, which would now fall under the responsibility of the Department of Economic and Development and Commerce and its secretary. Nonetheless, it is important to mention that for purposes of the visitor economy, the Tourist Development Company will still play a key role in determining the eligibility of the taxpayers by working closely together with the Secretary of the Department of Economic Development and Commerce. In general, the Incentives Code has been organized as follows. There are general dispositions which provide the public policy of the government. There is a section for general definitions which will be applicable to all industries that have incentives within the code. There's specific definitions for each of the industries that have incentives. And there are chapters which include the industry and the specific eligibility requirements and benefits for each industry that has a tax exemption. It is important to mention that as of the day of this presentation, the regulation for under the Puerto Rico Incentives Code has not been approved yet. Although a version was initially published at the beginning of 2021, it is currently suspended by the Financial Oversight and Management Board. Act 60 of 2019 provides benefits of general application to all industries unless they are otherwise provided under the code, specifically in each of the chapters, which we'll be discussing later on the next slides. Generally, the benefits applicable are 4% fixed preferential income tax rate. We will have 100% income tax exemption on dividends and profit distributions. There is a 75% exemption on real and personal property taxes. Important to mention that property under construction is fully exempt from real and personal properties during the construction period. There is a 50% exemption on municipal taxes. The code provides for a 100% exemption on municipal license during the first fiscal semester that the operation begins, which agrees with the municipal code provisions. Also, the incentives code provide that net capital gains from the sale of property or assets will be subject to the municipal license tax, and it will be considered on the taxable portion of the operation. Additional benefits will be the 75% exemption on the excise construction taxes, duties, rights, and license. There is available a deduction and carryover of net operating losses for the operation, and what is called by the Puerto Rico Incentives Code as the flexible tax exemption, which is an option that taxpayers could elect to opt out from taking the benefits in a year. Generally, this is done when there is no benefit, that the entity has a net operating loss for the year, and whenever you make that election, you can claim the benefit in a future year. Proper notice should be done to the Department of Economic Development and Commerce and the Secretary of Treasury. It is important to mention that if a company has both eligible activities or activities that are covered under the incentives and taxable activities, to have proper accounting mapping to be able to identify the taxable operations from the exempt operations. In this slide, we can see an overview of the different chapters that the Puerto Rico Incentives Code has. On Chapter 1, you will see the small and medium-sized business incentives, which also covered business operations in Culebra. This chapter provides some special additional incentives for those entities or business that comply with the requirements. Chapter 2 are for the individual incentives. Chapter 3 covers the export of service and goods. Chapter 4 is the financial incentives, which include the international financial entities, the international insurers, the private equity funds. In Chapter 5, we have the visitors economy. Chapter 6 is the manufacturing incentives. Chapter 7, infrastructure and green energy. Chapter 8 provides the incentives for the agricultural. We have Chapter 9, which provides film projects incentives. Chapter 10, the young entrepreneurs. Chapter 11, the transportation incentives. And finally, the opportunity zone incentives, which are addressed in sections 6070.54 through 6070.72. In this webinar, we will be focusing on Chapter 5, the visitors economy. On the general disposition of the code, it provides, as we mentioned earlier, it provides the public policy of the government, which is encouraging the competitiveness and innovation of Puerto Rico and economic growth of the island. There is a special clause that is very important that states that whenever a new law is approved or regulation is adopted that offers terms and conditions more favorable than the ones in the grant, the tax-exempt listed may apply for a modification of the grant. There is obviously a discretion from the Secretary of the Department of Economic Development and Commerce, and probably it will include an endorsement from the Secretary of Treasury. This is a very important clause in the Bills of Rights, because if in the future there is an amendment which provides a better condition or more favorable than the one that you have in your grant, a modification could be requested. As well, if you are on a tax exemption of prior laws, this Bill of Rights could be requested to modify the grant. that you have. Also, there are some various credits that are available for certain transactions and businesses, specifically for the visitors economy. We will be discussing later some credits that will be available. Generally, the government will have, and the Secretary of the Department of Economic Development and Commerce will have the criteria to be issuing, and among the criteria that they will be following are the ordering in which the applications are received, availability of funds, status of the permits of the projects, level of tax credit as a percentage of investment, and return on investment. This slide is for you to take a look at how continuously the code is being evolving, and projects have been filed to amend certain sections of the code. Only in 2021, over 25 projects have been filed to make amendments to the Puerto Rico Incentives Code. And obviously, taking this into consideration, obviously we must be alert for any changes and for planning purposes. Obviously, you have the Bill of Rights, that if any of these bills provide anything that has a better benefit that was granted in your tax decree, you should be aware and coordinate with your tax advisors. I will be leaving Madeline Tubens, who will be discussing the tax incentives, specifically addressing the visitors economy under Chapter 5.
Some historical sites that are also of great attractiveness. So what we want is to promote investors locally, and like local investors and foreign investors to come to Puerto Rico to invest in us by creating a new capital. And the code wants to incentivize both by offering reduced tax rates in different areas and also certain tax credits that we will discuss during throughout the presentation. As with the standard terms, any exempt business that have an grant under Chapter 5 will have the benefit for 15 years. It can be extended for an additional 15 years, and also the flexible extension is available. We will now commence and address the discussion on the who can benefit for this incentive. Well, you have to be an eligible business. And basically, an eligible business includes either a new or an existing business, and you have to be dedicated to the tourism activity. Well, on the next slide, we'll discuss some categories that fall into the tourism activities. and you cannot hold a tax exemption under a predecessor law that incentivized the tourism industry. If you had one concession or decree, you can surrender it so you can apply for the benefits under the incentive code. What is an existing business? That's a business. To determine if you're a new or an existing business, you have to go to the application date. So at the application date, if you have been operating or been dedicated to that tourism activity, then you're considered an existing business. But not only that, there's an additional action item or requirement, and that's that you have to substantially improve or expand the property you will be using in the tourist activity. Those improvements must be capitalized, have an economic life of at least 5 years. And into the specific dollar amount, that's going to be determined by the Secretary of the DDEC on a case-by-case basis. The other area of the other variant of an eligible business is the new business. And it has 2 subsections. First, the first one, I like to call it like the brand new business. What's a brand new business? That means that as we go back to the filing date, and at that date, the business is not operating. It will be engaged in a tourism activity. And also, it has not used its facilities previously in a tourism activity, and there's a 3-year look-back period. So not only you haven't been operating, you cannot have recycled property, it must be new. And there's a discretion from the Secretary of the DDEC to reduce that look-back period to a year and a half. And the second variant is a business that even though there's an existing business or structure that has been dedicated to that tourism activity during that 3-year look-back period, it's been either acquired or contributed by an exempt business, and the goal is to invest in those facilities to the amount that it doubles either the market value or the purchase price of the business. So basically, you're renovating the facilities or the property or investing in it so much that it's brand new because you're doubling the value. And those renovations must be completed within a 3-year period. So what is a tourism activity? Most of the time, or at least for me, when we think about tourism, we might automatically think about hotels. And even though hotels are known, recognized category, as you can see in this slide, there are almost 12 categories of different activities that can fall into what is a tourism activity. And we can segment it by type. There are activities that are related to hostelry, accommodation for paying guests, and those some examples are the hotels, condo hotels. There's different programs depending on the location of the inn on the sites. For example, the Posadas de Puerto Rico. Those are for certain inns that are located in urban areas. Or there's the Puerto Rican Parador. That's very similar, except that those are targeted for inns that are outside urban areas. There are activities that are related with agriculture, like agrotourism, agroloading. There's a water category, like marinas and nautical tourism, and other categories is for activities and fund facilities. And then there's a catch-all clause. So if a person has a business idea that's creative, innovative, it can propose or present the idea. Or also the Office of Tourism can include new programs. I would like to emphasize that the tourism activity does not include short-term rentals. That's something that sometimes that's a question we receive, an often question we receive, but it does not include short-term rentals. And on the side, you can see that the benefits do not only apply for businesses engaged in these activities, it also applies for businesses that lease property to a Chapter 5 business or property dedicated to the activity. Okay, on the next slide, for reference, we included a description under each of these categories. Due to time constraints, we cannot go over each one of them. So what I'm going to do is I'm going to pass the slides for a few seconds. And when you receive or you view the recorded version of this seminar, you can pause the video and you can read the material and have it for reference. Okay, now that we've reviewed some of the tourism activities, we'll continue to discuss the why. This is a different type of why. The first why was why these incentives were considered as part of the incentives code. This why is, why would I want to benefit from these incentives? This is a summary of the lowered income tax and personal and municipal tax rates compared to those of a regular Puerto Rico business, a regular business doing a business in Puerto Rico, and also compared to the Act 74 special law. That was a predecessor law for the Act 60, Chapter 5. It basically has the standard terms that were discussed by Omar at the beginning of the presentation, with a 4% income tax rate. Important to note that when these reduced rates apply will depend on the type of tax we're referring to. For example, the income tax will apply either at the beginning of the commencement of operations or the filing date of the application, the latter. In the case of municipal taxes, like the municipal license tax or property taxes, they will apply, the periods will commence upon filing the application. How you can request an extension for the commencement of the application of these benefits, but the default rule is that they will begin to apply once you file the application. For the municipal license tax is a 50% exemption. Property taxes have a 75% exemption. There's a 100% exemption in sales and use tax, for example. Here is an example on the mechanics of how would the exemption apply or the reduced tax rates applied. This is specifically for income tax purposes, and we will be comparing a corporation, a regular corporation versus a corporation that has a concession under Act 74, and a corporation with the Act 60 Chapter 5 decree. And the reason we're presenting this is sometimes the mechanics of how you apply the benefits is not so straightforward. If you want to compare an Act 74 with an Act 60. And basically, bottom line is that, for example, a corporation that has a net income of $3.5 million will be subject to a 46.38% effective rate considering dividend distributions versus a 4% rate either with an Act 74 and Act 60. The comparisons of the effective tax rate under Act 74 versus Act 60 may be different for those corporations who have lower taxable net income. In this example, they break even because in both scenarios, because in the Act 74 scenario, the net taxable income after considering exemptions is subject to the upper level of the tax rate. Now, I will continue and explain other relevant benefits.
Thank you, Madeline. I'm going to be discussing other relevant benefits of the visitors' economy incentives. It is important to mention that upon a sale of a business, there is a special rate of 4% on the sale of shares, participation, or substantially the sale of all assets of an exempt business. And the 4% will be applicable to the same proportion of eligible income, which is the exempt operations, with certain limitations. If the property, for example, if the property is used for the tourism activity during the next 24-month period, this specific limitation is applicable to the shares of developers when sold. The transfer occurs while the tax exemption grant is valid. Otherwise, if the sale was made after the exemption period was valid, the gain will be subject to a special computation, and the 4% will be applicable to the book value of the stock at the time the tax exemption expires. It is important also to mention that an approval from the Secretary of the Department of Economic Development and Commerce will be necessary upon a transfer of grant, stocks, or majority proprietary interest in an exempt business who will continue to be engaged in the tourist activity. The visitors' economy incentives also provides for a credit for an eligible tourist investment. The eligible tourist investment includes cash or property contributed to the exempt business, cash contributed by public corporation of the government, loans granted and financing commitments for capital investments, as well as shares or units in a condo. Also, it includes loans to secure by the exempt business. How the credit will be computed and when the credit will be claimed. The exempt business has two options for the credits that are illustrated on this slide. The exempt business can claim a credit up to 30% of the total project cost. If that is the route or the option that the entity or the business elects, it will be able to claim 10% of the eligible investment on the year the business secured the financing for the construction of the project. The remaining 20% will be available in 3 equal installments, beginning when the exempt business receives the first paying guest. And the 2 other installments will be on the 2 subsequent years. The other option is for the business to claim a credit up to 40% of the total project cost. Under the alternative, the tax credit can be taken in 3 equal installments, and the catch is that it will be available upon commencing the second year of operations. This is a business decision for each exempt business, and generally we have seen that the majority of our clients usually go through the 30% due to time value of money. You have access to a benefit faster on the first option rather than taking the 40%, unless you have to wait until you meet the second years of operations. We already discussed the eligible investment. What will be included in the total project cost? It will include acquisition of land, construction, marketing until the opening of the activity, pre-opening expenses, wages. Also, it will include expenses incurred during the first 12 months of operations, such as the payroll, the property, plant, and equipment that is purchased, expenses related to issuance of debt, interest, and financing charges, among others. Important, it will not include any costs incurred prior to the application conference. This credit, the credit for the eligible investment, generally is something to plan ahead with the pre-application conference, which Madeline will be discussing further in the next couple of slides. Also available are credits for product manufacturing in Puerto Rico. This credit is available to exempt business up to 25% of purchases of product manufacturing in Puerto Rico during the year. Important, the purchases must be made to an unrelated business entity. There is an increase in the credit whenever the entity or the exempt business is considered a PYME or is operating in Culebra, which the credit is increased. There is a certification that will be issued by the Department of Economic Development and Commerce. A small and medium-sized business, which are called as PYMEs, generally have additional incentives that I will be discussing in the next slide. But to be considered a small and medium-sized business, the exempt business has to have on average 3 million or less of gross income for the 3 taxable years prior to the current year, and it has to commence operation after July 1 of 2019. It is important to mention that when you are in the process of this application, if your exempt business complies with the requirement just discussed, it should be addressed on the application. It must be requested specifically that you want to be considered a PYME and request the benefit that we will be discussing. Important, these benefits will not be available to individuals. it is only for entities that are eligible. Okay, the additional benefits, and that these benefits will also be applicable to entities operating in Vieques and Culebras. These special rates applicable for income tax are 2% fixed income tax rate during the first 5 years of operation. The remaining years of tax exemption will be at a 4%. For real and personal property taxes, 100% exemption during the first 5 years, and after the remaining period of exemption will be 75% exemption. In the case of municipal license, we will have 100% exemption during the first 5 years, and the remaining period of exemption will be 50%. As already mentioned, the tax rate for product manufacturer will increase to 30%. There is an opportunity in the case of the PYME to rent for $1 certain property of the government. In the case of business entities that want to establish their operations in Vieques and Culebras, the same applicable special additional benefits will be applicable. The income tax for the first 5 years will be reduced to a 2%. The remaining the remaining period of exemption will be the 4% tax. Both real and personal property and municipal taxes will be 100% exemption for the first 5 years, and the rest of the exemption period will be 75% and 50% accordingly. And they will also have available the credit, the increase in the 30% of purchases of product manufacturing in Puerto Rico. Now I will leave this section to Madeline, who will be discussing the process of the application for the tax incentive.
Thank you, Omar. On this section, we'll address the how. To be successful during both the application period and the benefit of the tax incentive, the applicant, the business, must be proactive. The first step, and this is the most important step, is that you plan ahead, and plan ahead with time to ensure that your business is operating or will operate with something that's related to a tourism activity, and that also meets the requirements to be a new and existing business. It should plan the timing of the investment to ensure any costs incurred are available, for example, for the tax credit, and to ensure that it complies with the timing of the filing and the responses. And finally, since these activities, these projects are often require construction, you have to take into account the permits within your structuring or your planning, because this can affect the timeline of when you can commence operation, when you can commence construction, for example. After you have planned and you make sure that you are eligible, it's important you prepare and file a pre-application that's filed through the SBT portal. The application process is done mainly online using the SBT. Make sure that your account, it's important that the account is associated with an email address that you often use. And also it's a good practice to go in and to the portal itself and verify the status of everything that's filed, just in case you received a notification and it went to the spam folder or you didn't receive it. Because all communications will be done through the portal, and sometimes they require action from the applicant. and they have a deadline. So then that's that side note apart. The second step is to prepare and file the pre-application. Once that you have the meeting approved and the pre-application is approved, you'll receive a letter, and that letter will have the date that's very important date since when you can accrue the cost that will be eligible for the credit. The third step is to actually file the complete application. Under the current regulations that are suspended, the filing fees are $1,000 plus a transaction fee of $5. Please note that the application will depend, even though everything is covered under Chapter 5, there are different types of applications. For example, there is an application for those activities that are related to inns or accommodation services with more than 15 rooms. That's a separate application from the one for those activities that have less than 15 rooms. So it's important to select or file the correct application. Once the application once filed will go through the evaluation process, and it can take from 12 to 18 months for the evaluation. And in here in step 4 it's in another step that is important that you are verifying your SBC account or your email, because if you don't, sometimes happens that since there has been a lot of time has gone by since the time you file the application, and when an officer examines it and may require, for example, new debt certification. So it's important that you're aware of any requests, because if not, the application will be archived and you will have to restart the process again. After that, the tax exemption grant decree is issued and approved. It will contain the terms and conditions. So once you receive that, you'll have a period of time to accept the terms and conditions. After you accept the terms and conditions, if you haven't begun operations, there's an additional requirement to file a sworn declaration informing the date of commencement. And after that, there's an annual compliance requirement to file the annual report. And on this application process, there are 2 areas we want to emphasize or highlight. And one is the content of the pre-application conference requirements. This is the pre-application. This is like an executive summary of your project. In that application, you'll include the merits of the proposed project, the contributions that we will have to Puerto Rico, description of the activities, the estimate of the costs that are expected to be incurred in the development of the project, funding sources, and any other information the Secretary of the DDEC may require. That's for the pre-application. For the actual application, the intrinsic values or the intrinsic evaluating items, basically what the DDEC wants to ensure is that your project and your business you will not only invest new capital in it, but that it will lay down its roots in Puerto Rico by also supporting other areas of commerce. So that's why the business must justify that it will contract local services, use local agricultural products, use products manufactured in Puerto Rico, deposit its funds in financial institutions located in Puerto Rico, promote new jobs, for example. These are some of the main criteria. And just to have an idea of the actual information will be included in the application, we have separated it in different areas. There's the basic information related to the entity, its structure. It can ask for description of the facilities, the description of the product, the activities, how it will promote the economy of Puerto Rico with the items we just discussed, the estimated cost, also income and employment projections, financial statements, investments in capital, and other supporting information such as the certification, business permits, endorsements from the tourism office, etc. And finally, here's just a recap of, in a nutshell, of this last section, the timeline, how it will go, beginning with the eligibility and on that step one we previously discussed, and ending with the unconditional acceptance of the tax decree and notification of the commencement of operation as applicable. With this, we have concluded our presentation. Please feel free to contact us if you have any questions, additional questions, and thank you for your attendance.